Yo, what's up everybody? It's Sunday night, April 18th. So I woke up this morning and I saw that Bitcoin had dropped like almost 20%, I think 19.5%. And a lot of the other cryptos were down too. Bitcoin now I think is down about 10%. So we know that this thing is very volatile. I mean, we've known that. And the volatility is going to continue. And as I said in several prior videos, I don't know where Bitcoin is going to go. And my whole theory is that these cryptos are a manifestation of the rest of the world seeking a payments alternative, an alternative payment system to the current dollar-based global financial system. And again, that's because of US policy intended to weaponize the dollar to shut certain countries and entities, individuals, companies out of the dollar-based global financial system. So the US has a very powerful geostrategic weapon. You could even think of it as a kind of a militarization of the dollar system to the benefit of the United States, at least from a geostrategic or even a military standpoint. It's not going to benefit, this is my opinion, it's not going to benefit the United States long term because it will force the rest of the world to find an alternative. I'm not sure what caused the correction today. There was a tweet on a Twitter account called FX Hedgers that said the US Treasury is going to charge some financial institutions with money laundering related to Bitcoin or crypto. So maybe that was it. I don't know. There was another story, and this came out last week. I think it came out on Friday, even maybe on Thursday. So it's kind of like old news. It was saying that Turkey was going to ban the use of Bitcoin for payments. So I don't know. Take it for what it's worth. I don't know why. I mean, these things could happen. They're very volatile. You have a large, I would say, universe of investors in here who are very unsophisticated. They're throwing their money in. So in an environment like that, that could happen. I mean, that could happen. I don't know. So we'll see. I mean, I'm not an investor in Bitcoin. I stick with stocks. I stick with some commodities. I stick with Forex. So let's talk about Forex for a second. So the dollar has fallen for the last 2 weeks. It might be getting a little oversold if you want to, talk in technical lingo, so to speak. But the dollar's longer term trend is down. I always advise selling these rallies. Major fiscal stimulus, trade deficits, fiscal and trade deficits, that sort of thing. So, that's just the overriding negative fundamental for the dollar. And in the bigger picture, what I mentioned earlier was this de-dollarization, which is a consequence of the weaponization of the dollar. But that's really, really long term. I mean, that's something that you're talking about a major paradigm shift, but that's going to play out over a long period of time. I mean, that's not something you trade day to day or month to month. I mean, that's just, you got to have that in the back of your head that the world is moving towards a different system. That's going to happen. I mean, you can count on that. So, if you're a trader looking to do, short-term trades in the dollar, I mean, if you want to look at we've had 2 weeks down now, maybe you get a little bit of a rebound, but that just gives you another opportunity to sell or add on to your short position. Gold was very interesting for me last week, I have to be honest, because the previous week in the data, the gold producers were pretty aggressive sellers of gold futures up around 1750, 1755. So I really thought that would be a cap for the time being. But we blew through that. We're at almost 1780, 1777. In the most recent data that came out on Friday, we saw that gold producers actually were buyers again last week. So they covered a lot of shorts, and that was interesting. So they're still seeing value at these levels. And I suspect, or I didn't have a full look at the numbers, I just looked at producers, but I'm going to go check it out. But I suspect that speculators coming back into the market as buyers, open interest in gold futures had gotten down, I think it was like at a 2-year low. It might have even been a 3-year low. I mean, you might have to go back to 2018. I got to look at that again. But that was a very low level of open interest. So, what does that mean? I mean, potentially there's a lot of money on the sidelines that has gotten out of the gold market, and it's poised on the sidelines. And, they like to jump in when it goes back up. They don't buy when it goes down. They sell when it goes down, and they buy when it goes up. So, that's a potential driver for higher prices. We'll see this week. A lot of focus, I think, going to be on bonds and bond yields. I read something at 145, 146 on the 10-year yield. That's kind of like, the cry uncle level for the bond shorts in the the large speculative funds. In other words, if we break down through that yield, in other words, if the bond prices go up and that threshold is crossed, I mean, you're going to get a lot of short covering. I suspect that's already happening, the short covering. But as I said in my video yesterday, the reaction function got blown up. It's like, hey, what happened? Bonds were supposed to go down and yields were supposed to go up when we had blowout economic numbers, like huge retail sales, big giant drop in weekly unemployment claims, Philly Fed index, manufacturing way up. But it went the other way. So much for your fancy terms. All you fancy people on Wall Street, you fancy analysts. So yeah, that's it. Monday, tomorrow, I'll be finishing up the new edition of MMT Trader. In the meantime, if you want to check out some of the recent editions or the past editions, go to my website, pitbulleconomics.com, and sign up for a 30-day free trial of MMT Trader. Enjoy the rest of your Sunday, everybody, and get ready for another wild week. Oh yeah, we have 2 central bank meetings this week. We got the Bank of Canada on Wednesday. No rate changes expected. We have the ECB meeting on Thursday. No rate changes expected, but those are always fun. Those are always market movers, or at least potentially they're market movers. If you're in Forex, there's money to be made there. So check out my website, pitbulleconomics.com. See everybody tomorrow. Bye.